Hello, everyone, and welcome. My name is Anne Karen. I am a people strategy expert, and I help startups with building their people organization. But today, I'm wearing a different hat. I'm here as the APAC Xoogler lead. So here we are for another APAC Xoogler Demo Day. And today we have none less than 10 amazing Xoogler startups presenting to you. As mentioned in the name, the event brings you startups that have at least one ex-Google founder. So Xoogler as ex-Googler, that's kind of how it works. And I would like to bring on stage Chris Fong to tell, so he can tell you a bit more about the Xoogler community. So over to you, Chris.
Thank you, Anne. Hi, everyone. It's great to see everyone here today. Thank you for attending this demo day. My name is Chris Fong, and I started this 14,000 plus member Xoogler community in 2015. And I'm going to take a couple of minutes here to share more about our global community. Our members consist of founders, investors, and others in the startup ecosystem. And thanks to over 100 volunteers globally, we run over 300 events a year, like the one you're attending here today. Please review our newsletter at xoogler.substack.com to view the other events and reach out if you'd like to partner on any of our future events to support more startup founders. After our first demo day at Google's headquarters in 2016, we created the investment syndicate on AngelList. And after 2.5 years, we made a return of 3x for that first investment. We hope that you'll be able to find some great startups to invest in here today as well. After doing 40 syndicated deals, we launched our first fund. It included Google's first angel investor and now Alphabet board member as a LP. And now we're on to fund 2, and we look forward to partnering with more investors like you today. Finally, we launched Xoogler Team yesterday. We've actually heard many startup founders looking to hire many Xooglers, and we heard many Xooglers looking to find work. And as a result, we have started this organization as an offshoot to really help people find each other and create more jobs within the ecosystem. Please email team@xoogler.co if you have companies looking for full-time consulting or other expertise that our 14,000 members can assist with. Next slide, please. So why are we here today? You're here to look for these type of startups. As you can see by scanning this page, we have many successful startups launched by ex-Googlers, from Xiaomi and Pinduoduo in China, to Canva in Australia, to LiveSpace with presence in India and Singapore, to many other global startups with its everyday names like Instagram, OpenSea, Twitter, and FalconX. And finally, next slide, please. Just want to show you what we have here. We've done so many demo days all around the world. And please support all these founders here. The top photograph is from our demo day back in San Francisco. Circled in red is actually Solana. If you had backed that founder back then, you bet over 4,000x from that return if you exited. And now back to Anne. Thank you so much for having me here, and good luck to all the startups.
Thank you very much, Chris. All right, so the team in APAC is quite active in helping our members connect and support each other. We regularly organize local networking events, regional speaking events. We connect members with mentors, and we obviously bring our best startups in front of you once or twice a year. Okay, so let's speak about our demo day now. First, yep, here we are with the slides. So first, like in the previous editions, this event is, again, a fully volunteer effort. We all have day jobs, and this event would not be possible without my partners in crime here. They have helped me pull this together. A lot of work has been put in organizing the logistics, but also on curation, on mentoring. So a huge thank you to everyone. Thank you, great job. In view of the success of the last edition, we are partnering with Stonks again this time. For those who do not know the platform, let me quickly walk you through it. You should now see on your screen a fake startup called Googler. Feel free to click the buttons and practice the various actions here. This is for practice. All next startups that will be presenting are real startups, so you don't play around on the other startups. Googler is the practice one. As you can see on Stonks, on the screen, Stonks allows you to see the deal page of the startups that are presenting. You have a couple of action buttons. The two main one is first to be directly connected with the founder. You can click intro, and there's one to directly invest in the startup as well, and it's called invest. Surprise, surprise. All right, so play a little bit with it now if you want, but here you are. You see it's quite simple. You know it all now. After every pitch, there will be this amazing panel of investors that will have a 5-minute Q&A session. So Karissa, Eunice, and Michael, we are very honored to have you with us today. See you very shortly after the first pitch. So yeah, we're ready to get started. So it's time for me to call in the first startup on stage. The first startup is Negative. Negative is a startup that helps you reduce your carbon footprint and offers what you and offset what you can't. Sorry. Over to you, Sam.
Thanks, Anne. Hi, we're negative.eco because carbon neutral is not enough. The problem today for all of us is that our world is literally on fire due to climate change. Existing voluntary solutions are piecemeal, offsetting activities like taking a flight. The calculators are hellishly complicated without necessarily being accurate. And worst of all, the offsets purchased are typically aspirational, like planting a tree and hoping it grows to adulthood and doesn't burn down, without necessarily being effective. The ideal solution to this problem would be comprehensive, covering the entirety of somebody's footprint. It would be simple and accurate, calculated at a national level, and critically, the credits purchased would be provably effective, like wind, solar, hydro, and biogas. Introducing Negative, which helps you understand and reduce your carbon footprint, offsetting what you can't. The voluntary market is already $2 billion. 95% of that is in the US and Europe. If we capture just 10% of that, we're already almost $200 million, growing to $4 billion by 2030. And even that is a drop in the ocean of the total carbon market, including mandatory credits, which is already almost $1 trillion. Our competitors are typically too complex, too piecemeal, and/or too expensive, and we believe we can maintain a cost leadership position still with good margins. We've already built an MVP supporting subscriptions, education, and an API foundation, which supports an ambitious roadmap, including running our own projects, using technology for verification, and some exciting IoT features which are coming up. This was built by an internationally renowned expert in sustainability, myself, a technologist, and a fellow former Googler who remains as an advisor in product, as well as this young and diverse team of climate experts. Please feel free to get in touch. You can request an intro, you can sign up at negative.eco, or we'd love to hear from you directly by email. Thank you very much for your time today and interest.
Fabulous. Thank you, Sam. So let me bring in the investors, Karissa, Michael, and Eunice. Over to you for 5 minutes of Q&A.
Hey, Sam.
Hi, Sam.
First, guys. Sorry.
Go ahead,
Sam.
Karissa.
Yeah, Karissa here. Thanks for the pitch. It was really lovely. Would love to dig deep on, you mentioned you have a technology for the verification, for verification, and that's been probably the global challenge of carbon credits. Would love to understand more into what sort of technology you think, would be useful, so people can verify their credits.
Okay, so to give one example of a technical architecture we put together, it's using IoT to mint effectively carbon credits tokens as the offsets happen. So, for example, wind, solar, hydro, we can do that basically in real time.
Got it. Thanks.
Hey, Sam, thank you so much for the pitch. I would love to understand who the ideal customer profile is here. Who are your customers? And maybe if you could just elaborate on your business model, because I think you didn't really cover it during the pitch.
Okay, so we have an API-based foundation, and we want to start with B2C, but we can also introduce, for example, B2B, and we're really excited about the possibility of doing APIs. For example, when you take a flight, currently you can offset the number of kilos for that flight. So we can add different segments. The consumer segment is based on a per capita footprint. So you can offset, for example, yourself, your partner, your kids, your employees, and hence, neutral not being enough, we want you to go negative.
And the business model? Sorry. Oh, so sorry. And the business model, how are you monetizing? Okay, so we have feel free to jump in wherever you want, but we have a price that we buy offsets today. We basically buy offsets in Southeast Asia where they're both effective and efficient, and we sell them into the West where 95% of the market is, and where people are willing to pay a reasonable rate for them. We want to get to sufficient revenues to be able to invest in projects ourselves, and then we're basically betting on the predictably increasing price of carbon credits going forward.
Can you talk a little bit about your customer acquisition? Because obviously going after this market, it's going to be quite costly. So how are you planning on doing that?
We do have viral functions in there. So, for example, we have a public profile page. We have the ability to share and get a credit, for example, 1 ton of offsets whenever any of your friends sign up. This is something that people do because of climate anxiety, but it's also something that people want other people to see, right? So if you look at like Rogers 5 factors, like observability is a really important one. I might have great underwear, but if you can't see it, then it's, doesn't exist, right? So we want you to be able to go out there and say, here it is, and just like a Lamborghini is much more visible, right? We can have you posting on your social media or with friends or email invites and so on.
How do you differentiate from other carbon offset startups? Like, what is really your core differentiation here?
I think I'll leave Sophie to have our sustainability expert.
So the current competitors, they tend to ask for very specific questions to try to capture your footprint, which actually is not very accurate because you're going into a lot of lengthy exercise and then you're missing some of it. So they want to be precise, but they're not accurate. So the idea we're having is to actually have a larger, it's a lot simpler to get to see your footprint, which is based on the national statistics. And so it's a lot more reliable. So we are looking at simplicity and of course the price differentiation as well.
I see. So it wouldn't be as self-reported, I guess, right? You would try to plug into things where you could extract that data seamlessly.
Yeah, it's self-reported. You can tell whatever you want. You can feed the machine whatever you want. So the idea is actually to take existing statistics at a national level and apply that to you.
Can you tell me a little bit about your ask?
We're looking to raise to hire several staff to do things like growth hacking, marketing. We don't want to do a lot in the way of advertising, but of course a viral marketing system still needs you to prime the pump. So we want to get a few people in. And basically we've been building with advice from some test customers and some early customers as to what they expect the platform to do and what features are a priority. And now we're ready to take that to market and start bringing people on board.
And so how much are you looking to raise?
We'd like to raise in the order of hundreds of thousands. Ideally, if we could raise $500,000, that'd be great. Yeah, that's our target for this round.
And one last question from you. And sorry,
a last quick one then.
Yeah, last quick question on my end. Obviously G20 is happening. Have you ever thought about the possibility that Southeast Asia may not want to sell you carbon offsets for you to sell to Europe, whereas we just want to keep it in Southeast Asia itself? Any chance of that happening?
Well, I think that's why we want to have our own projects and run them ourselves, so we have the possibility to be localized and play outside.
Thank you.
Amazing. Thank you very much, Sam and Sophie. All right, so coming next is Dushyant, co-founder of FewCents. FewCents is a startup that enables bit-sized checkout for any digital content. Please welcome Dushyant. Dushyant, over to you.
Hi, thanks, Anne. So I'm a co-founder at FewCents, and the problem that we're trying to solve is that of content consumption from a user standpoint and content monetization from a creator and publisher standpoint. So as users, all of us have been consuming more and more content from more and more sites, especially in the last 2-3 years. But we're getting really frustrated because we're seeing subscription paywalls show up everywhere. We cannot and will not subscribe to maybe more than 1 or 2 or a handful of subscriptions at a time. On the other hand, you have the creators and publishers struggling for revenue. Less than 1% of any publisher's users end up paying for a subscription, meaning that 99% of users are under monetized using super low yield ads as a business model. We feel that this has opened up a massive gap in the market for something like a bite-sized checkout. And this is exactly what FewCents has built. FewCents allows you to pay a small amount to access one article, one video stream, one podcast, and move on without having to commit to a subscription. And we've made it super low friction. How have we done that? We've done that by allowing a user to pay in their local currency, in their local payment method, so whether it's a wallet, online banking, or credit card, and with one single login across all the publishers and creators that are part of the FewCents network. The added kicker is that we've now allowed brands to sponsor this access for the user in exchange for data. This makes the conversions for the publisher many folds more while giving the user free access, and therefore everybody wins. Where we are today is we actually have about 70 small publishers and creators who are part of our network, and we've been able to give them up to 10x the yields that they get from ads. We are now poised to go after the big enterprise publishers, the whales, as we call them. And this is mainly what we are raising for. We're raising $2 million to invest in BD as well as a data and AI layer. Thanks. Ready for questions, along with my co-founder, Abhishek.
In terms of the hey Dushyant, very good to meet you, and thanks for the pitch, very helpful. In terms of the creators, which sort of geographies are you targeting? And you mentioned that you've partnered up with a few creators. Which geographies are they in, and obviously what's the expansion plan going forward?
Yeah, so our business is global, so technically open for creators and publishers anywhere in the world. But we've honed in on the US and India as the first lane that we want to go after, simply because both these countries produce a lot of English content and they cross-pollinate. So users in India consume a lot of US content and vice versa. Most of our publishers to date are based out of Asia. That's simply because of my network and my Google experience in this part. But part of the money that we're raising is ready to establish a base in the US and go big with publishers there.
Hey, a couple questions on my end. Thank you so much for the pitch. I've actually thought very deeply about the space, and in fact, I wanted to build a startup doing something very similar. So my first question is, why bite-sized checkouts versus the Spotify model, where users can sort of maybe in a tiered subscription approach, right? Pay a certain amount per month and then get unlimited access to, I guess certain publications. And my second question is, what's your strategy for acquiring the publishers? How do you work with them?
I can take that. So you are absolutely right. Putting a subscription layer on top is good for the user in some ways. But at the same time, the problem we are addressing is the user who is a casual user, right? So if FewCents had the world's content behind its paywall, then yes, we can create a subscription plan or rebundle. In fact, why offer a subscription from FewCents side? We should allow the user to create their own bundles, because we have unbundled at the content level. We can allow the users to rebundle, right? So that is exactly the plan. At this point in time, we don't have enough content to offer the rebundling services to the user, right? And then, sorry, what was your second question?
Your publisher acquisition strategy and how you work with them.
Right. So when we think about publishers, so Dushyant mentioned we are focusing on a content lane, consumption lane between the US and India. So we are going after publishers and creators in these geographies. But within that, we've identified a few genres that work really well. So we have enough data. For example, we had 10 million impressions of FewCents just in October. So now we know which types of content people are willing to pay for. And the niches like sports, parenting, health, those work really well. So we want to focus on those genres in these two markets and specifically focus on publishers and creators who already have paywalled content, because then we know the quality of content is already high where people would be willing to pay. Right. So now that we have identified this segment, within that, we are going after the mid-market and the large publishers now. We have left the creators and the long tail to self-serve because it doesn't move the needle with the small creators. They just don't have enough traffic to monetize to begin with. Right. And if our end goal is to get enough users signed up with Few Cents Media Wallet, then we have to attack the whales. Right. So this raise is entirely focused on going pretty much the B2B sales motion cycle and going after India and US. And now that the COVID bump is over in subscriptions, right, we see it all around us, in Netflix, etc. We have the whales in our pipeline that are in contract mode already, right? So that cycle is very much B2B sales like cycle.
Just a couple of quick questions from my side. Can you just give me a little bit of background on the two of yourselves? And also, can you give me a little bit more on the traction that you've seen in terms of users, repeat users, and such, like just some high level KPIs that you've been tracking?
That will be the last question.
So my background is I've been a corporate jockey for a large part of my career, but in 2017, left the corporate track. Like a good Indian boy, I'm a computer science engineer by training. So I started my first ad tech company in 2017 and was lucky enough to get an exit in 2019. I sold Chauffeur to Apple, which is now AFFLE, which is now publicly listed in India. So I got super lucky in 2019. And then in 2020, COVID hit. So time to solve the next problem, which was right in front of me, subscriptions everywhere.
Yeah,
Right,
my
so
background is 13 years at Google, left in 2020, looked after Google's publisher partnerships, so very relevant to this space. And the network obviously has helped us build our MVP. And I was looking after monetization for publishers, right? So I think the other question was on traction. Abhishek, do you want to quickly take that?
Yeah,
very quickly because we're a bit over time.
So our user funnel starts with Few Cents impression showing up on the content. So when user lands on that content, whatever the publisher is doing for their marketing, we get surface there. So we are B2B2C. When user sees the Few Cents lock or the paywall, they can do a one-click sign-in and technically a one-click payment through the Few Cents wallet, which we are licensed in Singapore by MAS. So where we are today is Few Cents appeared in October 10 million times across 70 different small websites. And we generated roughly around 600 small transactions in October, which nets off in the gross value is small, but the yields that we talk about, we are all coming from ad tech here for the most part, or at least worked at Google. We know that yields is the biggest metric in this industry, how many impressions served and yields. So our yields were roughly $1.12 last month compared to advertising yields, 8 cents. 7 cents.
Thank you, Abhishek. I hate doing this, but I want to be fair for everyone. Yeah. Thank you, Dushyant. Thank you, Abhishek. Was great. Let's move on to the next startup now. So next up, we have Saif presenting Core AI, and that's a scalable and explainable AI for payment fraud prevention. Not easy. Saif, welcome on stage.
Cool. Hey, everyone. So did you know that payment fraud can cost APAC businesses more than $200 billion annually? And they can affect any company, any industry, anywhere. The main problem here is that most merchants don't understand fraud losses, let alone how to prevent them. The current solutions that are out there, they aren't tailored to the APAC market. They let too much fraud go through or fight in the wrong direction, and cause merchants to lose up to 35% of their revenue. That's where we come in. I'm building Corgi AI. It's a B2B SaaS solution based on analytics and AI for fraud prevention and designed to scale with the growing APAC economy, or e-economy, if you will. It's adaptable with a core engineering team that's helping to build a sleek, high-performance backend that translates to a fantastic user experience. It provides more visibility and transparency than anything currently out there in the fraud space. We put dispute and fraud metrics front and center so you can see exactly how it's affecting your business and you. And we want to be completely upfront and honest with you, so we make our ML model performance available 24/7, 365. Best of all, it's easy to use, plug and play, and you're ready to go. It's a fraud prevention SaaS solution that the industry has been looking for all this time. And next slide. Yeah. And within 1 month of launch, we already have 5 clients across different industries globally. With Corgi AI's help, we have helped them unblock about 30% in daily revenue and reduce daily fraud losses by 20%. This hyperspeed traction that we're experiencing really demonstrates how pressing this problem is in this market and that there's huge demand for our solution. The people building the solution, our team has 20 plus years of combined experience in building products for billions of users and generating trillions in revenue. 2 of us are Xooglers, and we are now ready for our next adventure. We're here because we want to share this journey with an awesome group of investors. We're looking forward to wonderful partnerships with some or all of you. And yeah, reach out to me if you'd like to learn more.
I say thank you for that. Sorry, Eunice, you want to go ahead?
No, go ahead.
I was just saying, can you talk a little bit about your target customer group? Because obviously it's a big market, but who are your kind of initial target audience and what's your route to market?
Right. So our initial target market is e-commerce and marketplaces. We're currently focusing on preventing fraud from the merchant side. So fraud can exist on both sides. There's a payment process in the middle, there's merchants, and there's consumers. So we're trying to target the space where the consumers defraud the merchants. And later on, we'll move to where the merchants are actually defrauding the consumers. And so our initial goal is to look at merchants, e-commerce merchants, and marketplaces. And the way we approach it is kind of a mix of outbound and inbound. So we want outbound to be for senior level staff or like mid-level staff at these companies. We've seen great success in like reaching out to CFOs. I carry out my sales pitch. It seems to resonate. And then we want to use that insight in the pilot programs we're working on right now to translate into a SaaS product for the longer tail as well. And that's where kind of the inbound market will come in with paid ads and some outreach. Does that help answer?
Thank you.
Yeah.
Hey, can you give us a better sense of how you're able to increase the accuracy in your fraud prevention solution, like compared to other competitors out there?
Yeah, it's kind of...
tag on to that question. If you can sort of give us a use case or an example of how it's done, I think that would be most helpful.
Sure. So yeah, I'll kind of add on those answers to one another. It's kind of based on, so a lot of the providers and the tech companies that come out of globally are usually focused on certain markets, and the models that they build and the processes they build are tied to those markets to a large degree. And so basically you'll see for training data for machine learning models, like if the majority of the training data is coming from the US or EU, they don't always adapt well to newer markets. So the approach we're taking is more lightweight. We're using some advanced data science methods which focus on smaller sample sizes, which we have in APAC. And we saw that we were able to actually greatly improve the performance. I won't give away the secret sauce, but yeah, it's trying to use those kind of methods. And sorry, Karissa, what was your question again? It was focused on...
It's more of a use case. So for example, of Bonito, I think one of your clients would love to understand how you help them prevent fraud.
Right. So we do 2 things. We help to prevent fraud, and we help to unblock revenue due to overly aggressive fraud prevention methods. So in a lot of cases, we see that if the fraud detection provider or the payment provider, they aren't as confident in judging whether something is fraud or not, they tend to over-enforce. And so they're actually blocking a lot of revenue just to catch a small amount of fraud.
And it's more of what, fake credit cards or?
It's a bunch of different things. So one major thing is friendly fraud, where someone just says, I'll dispute just for the hell of it, see if I can get some money back. Stolen credit cards, but upstream of that is stolen credentials, where you like steal the credentials, use someone else's card, they dispute it, chargebacks, all that fun stuff. There's also cases of like physical fraud where you intercept the package midway through. So a lot of techniques and methods people out there are using, and we're here to kind of help decipher some of those, or at least surface the information so that people who are very experienced in the fraud space can actually go in and say, like, okay, this is what this was. And card testing is another one. Basically, you buy a bunch of cards from the dark web and then start testing them.
What's your pricing model like?
So we're honestly, we're kind of testing that out with our pilot customers, but there's two main approaches that we're thinking of taking. One is basically on a per transaction basis. We charge about 0.3% of the transaction value because we're scoring everyone and then we're assigning a fraud value to it and preventing those that are bad. The other one is basically based on the amount of fraud losses prevented and the revenue unblocked, like 2% of that. But that's a bit more technically complicated to actually compute reliably. So we want to be trustworthy and we want to make sure we're doing right by our customers.
I can imagine it must be hard to attribute, right? Or sort of figure out exactly how much was prevented by you.
Yeah, so that's where holdbacks come in. So that's the more technical side of things where we have holdback experiments. So 5% of the transactions won't get our solution, initially at least, until we're like, okay, in the holdback 5% group, status quo, what were the outcomes like there? And then what is the outcomes like with us? Over time, we can say like, okay, we're doing a good job, we're trustworthy, just use us.
One last very quick question.
I mean, yeah, sure. One last question. Well, I mean, what are the beachhead markets, like even amongst e-commerce, right? What product categories or what sort of marketplaces do you want to focus on?
It's anything really, anything that accepts digital payments. So our solution is kind of melding the digital payments data that's readily available with like on-site data as well for customer journeys. And so it's kind of industry agnostic. Anyone who uses payments that are digital. And we're even talking like some buy now, pay later providers to see if they can fit in there as well. Because they take on a huge amount of risk, which, yeah, I mean, that's part and parcel of the industry.
That's interesting. So you don't necessarily think that, it maybe makes sense to focus on higher ticket items where, I guess, yeah, the basket size is higher and obviously they want to prevent fraud or.
Yeah, so it's kind of like we're going to offer the basic services free because the data is very valuable for us to build out better and better models and better insights. But it can be high ticket items or someone can order 4 low ticket items and kind of the total value would be the same.
Thank you.
All right. Thank you very much, everyone. Safe, great presentation. Thank you. All right. Next startup help. So the next startup helps you understand what your customers are saying about your product. Leading the charge in the presentation today is Santanu, founder of Beagle. Over to you.
Hi, folks. About the products that you use, let me tell you a surprising fact, which is that you probably know and have read more about them than the brands who are in charge of making those products and selling them to you. Isn't that surprising? And it happens because 90% of data about the products is actually in natural language, in the form of forum posts or blogs or YouTube videos or reviews and so on. And it's surprisingly very hard to actually analyze the data. For example, even to read 100,000 reviews, it would take you 7 months. So no wonder brands are basically just ignoring all this data. And as a result, there exists a big gap between what the consumers are perceiving and what the brand is actually perceiving. So this is what we are trying to solve for. And we've built advanced artificial intelligence algorithms which process this natural language data at scale and are able to derive very deep insights from this. This helps brand across the product lifecycle. So for example, now they can iterate on new products much faster. Market research is now done at a lightning speed at a fraction of a cost compared to traditional market research. Even keeping tab on competition is now so much easier. Promotions, bundling, all of this becomes so much easier using the insights that we provide. Our solution is battle tested. We've worked across industries in consumer packaged goods, in consumer electronics, automobile, and so on. And we are now expanding rapidly in US and EU both. That's where we want you and your support to fund us and make it much, much bigger than where we are today. Thank you very much.
Thanks for the presentation. Can you talk a little bit more about your go-to-market strategy?
Yeah, well, we are actually just inside sales. So we have sales consultants now in US and EU. Before that, it was just the founders, just working through the org and figuring out the sales process.
And who are you targeting in terms of clients?
Yeah, broadly speaking, it's under the CMO org, but whoever typically is in charge of consumer insights is really our target audience. Variously in industries, they're called product analysts or brand managers or product managers, but that's really who we are targeting.
Oh, Michael, you're on mute.
Sorry, thank you for that. Can you tell me a little bit about the competition? Because there's a number of competitors that are out there that have done similar things, like I think Brandwatch, Chattermill, and such like. So, how are you differentiating from them? And some of them have been around for quite some time and have got quite a lot of traction. So, I'd just like to know where you fit into the overall picture.
Yeah, that's right. In our experience, the biggest competition we have is from traditional market research agencies like Ipsos, for example. And Ipsos even acquired, a company similar to what we're doing. We've not found anyone do it at the depth that we're doing. At the same time, we're also, working with traditional marketing agencies to turbocharge their processes and to help, co-sell. But you're right, there is competition, but our algorithms and the depth that we have, we've not seen it in any other product so far.
If I talk to them, would they say the same thing? If I talk to competitors,
our customers say the same thing. That's what matters for us.
Can you talk a little bit about the traction that you've achieved a bit more?
Yeah, actually, we had a product built until COVID with some initial customers. It was very hard during the COVID time because we didn't really have a sales process in place. So we've now ramped up. We're up to very close to $1 million in annual run rate now. And like I said, we're now ramping up in US and EU. Some of the early wins in US are Neiman Marcus. We're working closely with Clorox, for example, and we're now also working with BizRate, who's like an aggregator of reviews. So BizRate continues to do what they're doing. We are kind of adding value to their customers as well.
And were they working with someone else before? Or are you converting them from another provider? Are they, first time, users to this sort of service?
Yeah, that's a good question. So typically we found they all work with some kind of a market research agency. Very few have in-house market research expertise, but they do have analysts who work with various vendors. Again, we explicitly focus on unstructured data or natural language data, as we call it. And most of them are basically just ignoring it or have a very peripheral understanding of what's in there.
And are you integrated in terms of the data sources, right? Are we talking like, Google reviews, like social media reviews,
Yes.
but also what about like customer complaints or the chats on their website?
Yeah.
Okay.
No, not so much chats, but definitely customer complaints and even internal marketing data, because some of these products have accumulated marketing data for years, and emails and specific customer feedback. We even work with phone calls, for example, and YouTube videos and forum posts and of course reviews and blog posts.
And so this is delivered through like a live dashboard
Exactly.
The analytics.
Yeah.
I see.
Yeah. The primary way of delivering this is a dashboard, but we also do custom reports because some of the clients have very nuanced needs, and we are happy to do that as well.
And so your 1 million in your ARR is this recurring revenue? This is a subscription-based revenue?
Yes. Exactly. Yes.
One last question.
Final question.
Yes.
What is your ask?
Yeah, we are raising $2 million, and we have about 20% of the round is we have a firm commitment for that. at pre-money 10 million. That's the ask. Primarily used for more sales in US and EU. That's fundamentally what it's going to be used for.
Thank you.
Cool. Thank you very much, Antonio. All right. So coming up next is the startup Dice Duck Monk, who is on the ambitious mission to make cloud accessible. Please welcome ex-Googler Lewis.
Hello. So the cloud computing space involves various cost trade-offs and burdens for companies small and large. Platforms such as Heroku here in the left column are enticing because you don't need expertise in engineering. The issue is that the cost premiums don't scale. So eventually you have to migrate to the cloud providers here in the middle column. It's unavoidable, but it's costly because you need engineering. And here is the cost dilemma. Additionally, there's a lot of complexity at scale that the tools on the right side, Infra as Code, help manage, but the engineering bar is even higher. And the cloud skills gap is the #1 problem that enterprises face when adopting cloud technology. And for the majority of these firms, cloud engineering is a cost center that they would prefer to do away with. And so we asked ourselves, what if we can retain all these advantages and benefits here and then avoid the cost disadvantages? Meaning a viable cost structure at scale without needing the cloud engineers ever. And so our solution is a low-code, no-code platform that's AI-powered, that enables teams to design, provision, and manage their infrastructure at scale, at all scales, in an idiomatic and transparent way. Additionally, we offer a marketplace of standardized third and first-party modules from which people can self-service and drag and drop. Fundamentally, we want to be the front page of cloud infrastructure and add value-added services where it makes sense and evangelizing modern architectures. The space is growing 22 to 28% year over year, and it's slated to be over $1 trillion in spend in the next decade. And so capturing just 1% of this would translate to $10 billion in revenue annually. We are a team of senior software engineers with a combined 15 years of experience delivering cloud-native systems. I was a core member of GCP, involved in the design of App Engine, Kubernetes, and serverless. We're seeking funding for sales and marketing. Thank you.
Thanks, Lewis, for the pitch. Go ahead, Michael.
Could you just give us a little, thank you, Eunice. Could you just give us a little bit of where you are on your traction?
Yes. So 7 weeks ago, we built a search engine for GCP. We've applied to YC with that, and we're actually interviewing with YC this week. So the pitch, we've since pivoted a bit because we realized that's a bad go-to-market strategy right now, because for search engine, it's for companies that are already at scale. And so then we have to do a lot of high-touch sales. And right now in this economic environment, I don't think it's a good way to build a smooth traction curve. And so we think that the low-code, no-code provisioning aspect is better for the down market, and it will be easier for us to do search and growth marketing. So we built the search engine so we can read the data from the cloud. The next step is to build out the right layer, which is why we're seeking funding.
And how much funding are you looking for?
We're seeking 500,000 to $1 million. Most of that is going to go towards sales and marketing. I think we're covered on the product front. And we plan to be based out of Japan, so we're going to have a really good burn rate in terms of product development.
I was actually going to ask about your go-to-market strategy, which you briefly touched upon. Are you targeting, the developers sort of more ground-up guerrilla style, or are you, is it more B2B sales, right, where you're targeting decision makers at enterprises and sort of working your way down?
Right. So the search engine we've built, we've been able to connect to various CTOs. They tried it, they liked it, but again, right now is not the right time for them to commit to a big contract. And they gave us positive feedback. Some of them wanted us to build various features into the search engine, and we had to decline because we didn't want to devolve into a consultancy. We wanted to build a product for the masses. So with what you said, kind of grassroots. And that's why we're pivoting to the low code, no code, because it'll be easier for companies that are just really early in their cloud adoption. And additionally, that fits in with APAC, where they're kind of behind the Western counterparts. So they're earlier on, and their core competency isn't in cloud operations.
And in terms of monetization, sorry, Eunice.
Sorry, just a very quick follow-up. And in terms of your cost advantages, can you give us an idea of like what the cost structure looks like compared to traditional, the GCPs and AWS?
Yes, I think our take rate, we're going to aim for a 3 to 10% take rate. Unlike like an Apple store, right? They own the hardware, so they can go up to like 30%. So I think our value prop is that we're somewhere in between infrastructure as a service and the cost of platforms as a service, which those they charge like 3 times more than infrastructure as a service. And it's not just the multiple, but that it doesn't scale. It just doesn't become sustainable for businesses at scale. So for example, I worked with Snapchat, and they eventually had to migrate off of App Engine. Originally, they ran entirely on App Engine, so then they slowly moved to infrastructure as a service primitives, and then now they're actually multi-cloud and on AWS as well as GCP.
Sorry, my question would be in terms of monetization, how much are you going to charge? Would love to cover that as well.
Yeah, so I think in the beginning, we have to charge that take rate 3 to 10% on the end client, the people who are provisioning stuff. Eventually, once we reach a critical mass and then we have leverage, then we can go to the cloud providers and then say, hey, if you guys want to be featured on here or whatever, we have to take a commission.
But to be more specific to your question, we don't have exact numbers right now, but common pricing models could be either per user or like per workspace or the number of assets you manage, something like that.
Any more questions? Can I have one more? Or not? Okay, seems like everything was crystal clear then. Well done, David and Louis. Great. All right. So the next startup is called The Modern Health. It is an event-driven AI that helps with both team productivity and mental health. Kanika, welcome on stage. Here you go.
Hi, I'm Kanika, an ex-Googler, computer science engineer, a published author, and an athlete. The modern workplace is at a pivotal point in its evolution. 4 in 5 workers believe that workplace stress impacts their mental health. Neuroscientists would tell you that you can cope with this stress in 60 to 90 seconds, but too many employees leave it for too late, leading to attrition, absenteeism, and huge productivity losses. Employers are spending lots of money in tools that are not integrated in the context of the employee. This context is easily available within the working calendar, and that's our solution. The Modern Health will seamlessly integrate and embed with the working calendar, combine it with behavior science, we use Ocean model for it, and provide daily holistic recommendations for the employee to thrive at work. Our 3 value propositions for the employee include micro changes that are backed by scientific research, being seamlessly embedded to give you a plan every day with no uncertainty and keep you on it because it dynamically changes. Lastly, we are creating better lives for employees by getting them to make better habits using Nir Eyal's hooked model. I've been on this journey along with an amazing team for 1 year now. We have significant interest for our platform in tier 1 organizations in Asia. And I can assure you that that interest is solid and real with 3 signed LOIs, with 1 from a very large enterprise organization, which you can find in my pitch book. I also know that a product like this needs to be loved. People need to be on it and be engaged, which comes from our strategy, design, and also the launch that we did on Product Hunt. We had over 70% engagement with people who launched, and we had 55 active engaged users in just 2 weeks. We are ready for a rocket ship, and that's why I am here, raising money to develop and scale a product that I'm extremely passionate about. If you would like to know more, you can hit on the intro button. Thank you.
Hi, Kanika. Thank you so much for the pitch. I think it'd be really helpful if you could provide some specific examples of the recommendations that you're able to provide on a day-to-day basis.
Absolutely. So the recommendations that we provide at the moment are divided into 4 pillars. So it's movement, it's nourishment, mindset, and meditation. So it's our platform is holistic in nature. And in each of these layers, we have experts that back our platform that provide scientific recommendations. And the algorithm that we have built based on the events that happen in the calendar recommends to the employee that this is what you should be doing. So it kind of keeps you going. In the end, based on how you are tracking on your micro changes, you see a power circle developing of how you're building better habits.
So, for example, is it kind of like my Apple Watch, which reminds me to take a deep breath every hour?
Okay, so there are 2 types of recommendations that we do. One is driven by content. So there is either an expert content or there is an infographic that tells you what to do. It's not just like, hey, breathe now, but hey, the simplest way to meditate is probably not belly breathing, but you could meditate while you were brushing your teeth, and here is how, right? So it's simple and active because it is meant for someone who is busy, who's not going to sit down on his chair and find that time to meditate. So the idea is to make it really easy for them to do it while they are busy with their life. So that's content driven. And then we do have nudges as well. So there are nudges which say, hey, looks like you're on a journey to meditate. It may be a good time for you to think about getting up early in the morning and seeing the sunrise and take a minute of mindfulness. So the habits or the nudges are integrated with the content that you see. So it's a framework that has been built. So if anyone understands how the hooked model works, it's trigger, action, variable reward, and investment. What we've done is the action is really simple, which is this content you want to see when you're feeling stressed or tired. When you see that, you go to the variable rewards, which is, hey, I'm getting more stuff over here, like clever nudges. And you want to come back to see what that is as you get hooked onto it to build a good habit.
And one last question, is this delivered through an app on my phone, or how are the nudges delivered content?
So I'm just going to share my screen really quickly, and I have tested and it should work. So this is my working calendar, if you're able to see. And you will see these yellow events over here, the ones that are marked over here, come from my health calendar. Now, you don't need to see all these events. These are the ones I have configured for myself. At a minimum of 1, you will get 1 event in your calendar. So it seamlessly embeds with your calendar, and you don't have to go out of it to another ecosystem to look at the recommendation.
Thank you.
So can you tell us a little bit more about your business model, please?
Absolutely. It's the employers who are actively looking for solutions like these for 2 reasons. One, because they do want higher productivity, and mental health and burnout is number 1 on any CFO or HR's radar. But it is also about getting that active data as the teams are remote now, more and more, especially for technology teams, on how they are doing. So for those 2 reasons, our buyer is really the employer. I have significant traction, and a lot of there is in my pitch book from leading organizations in Asia Pacific itself. And I have a signed LOI from Infosys Consulting to start engagement with us. So the employer is the buyer. Now, my platform is open for the employee to try and use. And in the third year, I do believe that people can hop on themselves and pay because they will understand how it works. And we would have changed a little bit of the behavior of how people think about these platforms. But for the first 2 years, it's the employer that is going to be paying for the platform.
And in terms
Again,
in terms of go-to-market, that would be mostly largely what, US?
So it's Australia. So I live in Melbourne. So it's Australia, Singapore, India, and US. We'll start with home ground, of course, Australia, Singapore, and India, Asia, and then expand to US in the third year. I just want to highlight one thing. When I launched on Product Hunt, I wanted to test out the US market, and the response was phenomenal. And as I said, we had active users really, really quickly, and they stayed on to the platform to not just watch the micro changes, but they even added them to their habit library and stayed engaged on the platform. So I do feel we should launch to US, but again, as I said, I'm here looking for resources that can help me build this product from where we are so that we can expand into multiple markets.
All right. Thank you very much, Kanika. Thank you for your questions. Panelists. All right. So our next startup is called Breezeit, and it's a marketplace that simplifies the process and improves the experience for event hosts and event vendors. Mentas, welcome on stage. Over to you.
Thanks, Anne. Mantas here, one of the founders at Breezeit. Now, every year, over $185 billion is spent on private events, such as weddings, celebrations, and small corporate parties in the US alone. However, organizing such events is certainly a hassle. To start with, it's very hard to find vendors that not only meet your requirements, but also are available on your planned date. And on top of that, coordinating the whole booking process with multiple vendors quickly becomes an overwhelming experience. Now with Breezeit, the whole process is so much easier. We've successfully combined a marketplace that helps to find vendors based on such information as their pricing and availability, and a SaaS solution that helps to coordinate the whole booking process in one single platform. Now that's discovery, coordination, and payment seamlessly working together hand in hand to deliver a superior event planning experience. Now, what's really interesting about our model is that unlike traditional marketplaces, we also tap into the pre-existing vendor-to-vendor networks. In this way, we unlock network-driven growth, additional monetization opportunities, and defensibility for our business. Now, we already launched the product, and we've got over 2,100 vendors on board. We're generating over $20,000 in monthly recurring revenue, and we're growing at 17% month over month. We're currently raising a $2.1 million round to accelerate our growth in the US market with over $600,000 already in the bank. Now, I would love to chat with all of those who are interested in category-defining businesses for very large markets. So if you're one of them, smash that intro button and let's chat. Thank you.
I guess I'll start, and I'm going to ask something slightly off, but I saw that you're a two-time founder. So what did you learn from your earlier two startups that will increase the chance of success in this one?
So thanks for the question, Michael. It wasn't me, it was the other founder on the team.
Apologies.
But I've been part of that early stage startup, and that's how we met, and that's how we started working together. To be honest, probably the biggest learning for early stage startups for us was that focus and understanding what's the core customer and really building around that initial, your ideal who is super important, because it's very easy to get distracted by ideas and then overcomplicate the whole thing, and that never helps.
How do you prevent leakage and disintermediation? I'm sure you get that a lot being a marketplace.
That's true. So on one hand, that's why we have the SaaS solution. So vendors do use that solution not only for the leads that they get from the marketplace, but also for their own customers because it helps them with contracting, quotes, payments, and they need solutions to accept payments. So that's on one side. But also our business model is not solely based on transaction fees. Most of our revenue comes at this point from transactions, and we're going to be adding payment margin once our payment volume grows. So although leakage, I think it's inevitable in this market, that's not necessarily as big of a problem for us as it would be for a traditional, transactional marketplace.
What's the percentage of vendors on your marketplace that actually uses your, tool as or uses a Breezit as a SaaS tool versus just listing?
Yeah, so all of them would use it to one or another extent, because if they get leads for our marketplace, it's just easier to process them there. And then the people that are booking, sometimes they prefer to do it that way, because if you book 10 vendors, you don't want to be using 10 different platforms. It's hard for us to say how much share of wallet at this stage we have from the vendors that are, using other platforms. So we wouldn't have that information at this point.
And if you had to pick, would you pick supply side versus demand, or how would you construct, your go-to-market?
Yeah, so we are very much supply driven, and we learned that the quality of supply and the quality of information that we find listing is a big driver of growth and on the demand side. So typically when we launch in a market, we start with the supply side. We start with 5 main categories. We narrow down on a location very specifically to build up the liquidity as fast as possible. And once we get to 200 to 300 vendors, depending on the distribution, that's the signal for us that it's ready for the demand side. And then we use the listings as our marketing content to advertise to, the people that are planning the events. So very much probably, and that's also a unique market position for us, that we're very vendor focused, which is something that we hear as a very positive feedback from vendors. And we believe we know that the key to this market is the vendors, which other marketplaces probably approach it from the other side. And that's where we see their weaknesses and our strength.
Are you, just double check, are you industry agnostic? So it's not like you're particularly customized for weddings or for, I don't know, entertainment?
No, on our marketplace, vendors can create listings for any type of event. Weddings is a big category for us and for our vendors, but they can create separate events with separate pricing and separate visuals for different type of the events. And then depending on what the user would select in the filter, that's the listing that they would see. So it's seamless. If you're planning a corporate event, the experience would look like that this vendor is only offering corporate services. But if you're planning a wedding, your experience would be more with the wedding visuals and then wedding pricing and the pricing guides. And that's dynamically changing. It's not a PDF that's uploaded. It's dynamically built into the system through the SaaS aspect of it.
Which markets are you targeting right now?
So we built up our business in Europe and Lithuania, and now we're expanding it to US with particular focus on Southern California. So anywhere between Los Angeles and San Diego. And that's our core focus right now. After that, we're going to go to the Bay Area and expand into other states.
You have time for one more question.
Why Southern California?
So initially, when we ran tests between California and Texas, we've just got better traction, better responsiveness in California. And then between Southern California and Northern California, Southern California is a bigger opportunity for us. Plus, it's got a very good density because you have Los Angeles, you have San Diego, and a lot of areas in between. So it helps us with the supply side acquisition because we can get the liquidity much faster than it would be, for example, in states where it's more spread out.
Okay. All right, thank you very much, everyone. So our next startup. So the next Xoogler startup helps their clients gain competitive advantage through energy efficiency and compliance. Welcome, Ashok.
Thanks, Annie. Hello, everyone. Welcome. We are Enerly, the most advanced energy management platform for industries. Let me start with the customer story. Vulcan is a German multinational with 3 advanced foundry plants in India. They were facing high energy bills and penalties, but had no idea what was causing it. Vulcan spent about $7,000 to install our product Enerly in one of their plants. Within 6 months, Enerly was able to bring down energy consumption by 13.5%, saving about $1,500 per month and reducing carbon footprint by 10.34 tons per month. Vulcan was awarded VDMA Energy Efficiency Award that year and is getting its ISO 50001 certification this month. Needless to say, Vulcan installed Enerly in the other 2 plants. Sign of a happy customer. Industries lose billions of dollars due to lack of real-time data and energy management tools. Vikram and I founded Enerly in 2019 with Nilesh, who's an experienced energy auditor, to help industries increase their competitive advantage by reducing energy costs and by improving their brand as a sustainable enterprise. Enerly is a SaaS platform that analyzes and presents energy consumption data and also gives reports, alerts, and recommendations in accordance with ISO 50001. The market for energy management systems is very large and growing fast. Moreover, there are exciting opportunities with what we can do with the immense data that we are gathering. Since the launch, our revenue has grown 5 times in the first 2 years itself, and this year we are expecting to more than double that to cross 1.1 crore rupees with a net profit and 0 customer attrition so far. Going forward, we want to leverage the immense data that we are collecting to provide value-added products like just-in-time plant preventive maintenance, carbon reporting and sharing of sustainability data, for which we are already in discussions with a blockchain-based carbon trading startup in Singapore. Potential with data is virtually limitless. Based on our conservative estimates, we expect to be in the range of 1 million ARR in about a year from now. Join us on this exciting, energetic, and sustainable journey. Thank you.
Thanks for the presentation. What sort of integrations do you require to be able to, accurately assess the various energy consumptions? Do you need a bunch of sensors like IoT sort of devices?
So one of the USPs that we have is that we are hardware agnostic. So it means that we work with multiple different types of sensors, multiple different types of IoT devices. This is very essential because when you take a typical case of an industry, many of the industries grow organically, so they have a big mix of different types of sensors and different types of meters. And unless you are adaptable to able to fit into that, the industries are not going to go and change their legacy systems, and that's a big plus for us. So we integrate not only electrical and solar, but we also do oil, natural gas, nitrogen, water, and all of those. That's a big advantage that we have.
And you mentioned 36 customers in the slides.
Yes.
We'd love to find out how much you charge each of them.
So we've kept our pricing model extremely simple. So we have just kept it on per meter basis. So it's in the range of about $100 per meter. And what we do is that's in the first year. And in the subsequent years, we reduce it as a subscription. So since the industries kind of have long life, right? They are there for about 20 to 40 years. That's kind of the range. When you set up a plant, you typically operate it from 20 to 40 years. The customer lifetime value is significantly high.
And what's the main hook typically, for a customer to sign on? Is it, cost saving? Is it compliance driven, right? Regulatory requirements for audits and all that?
It's amazing. I mean, it's kind of a right storm at this point in time, and all these parameters, as you mentioned, are coming together. So there is definitely regulatory oversight on how industries are managing their energy and what's the impact on the conservation, overall energy conservation this thing is. So there are mandates by government to have energy audits done and things like that. So that's one aspect of it. Secondly, the fuel costs are going through the roof. So even if I'm able to save anything between, we say that we can save up to 30%, but even if you save up to 8 to 10% energy bill, these energy bills are humongous. They are very large. So that really impacts the bottom line of our clients. And the third aspect is a lot of our customers demand, because of the Paris Agreement and all this, they demand that their suppliers need to have energy conservation strategy. So it's kind of a brand story as well. So the three kind of dimensions are kind of coming together.
What's the average length of a contract, and what's the average number of meters that a customer actually has?
So we have started, when we started, COVID hit right then. So our initial growth has been a little bit slow. Average customer size is about 100 meters, but now we have started getting bigger customers with like 1,000 meters, 1,500 meters. Those are, but average so far in our ticket has been 100, 200 meters. That's the average size has been. So there was another part to your question, Michael.
Average length of contract?
So we have customers who signed up for 3 to 5 years, but there is no reason for them to not extend it, because our subscription costs on the subsequent years are significantly low. The switching costs for the customer will be significantly high. So it's a very sticky product. Once they install it, they have typically no reason to find another supplier, because switching will be more expensive than subscription. And we have been very receptive to our clients. We have been adding features. We've been improving the product significantly.
I can have one last question if you want.
Yeah.
Or Ashap, if you wanted to add up.
Yeah, I just wanted to bring out the other thing is that we talked about in the verification of carbon data, right? We want to be the oracle of energy conservation industry, because we have the real data that's actually happening on the industry factory floor. So we are already capturing GRI standard scope 1, scope 2 data. We want to be able to share that, and the data can be used in very, very different ways. We have like every minute data from every equipment in a factory. We can do a lot with that.
Cool. Thank you very much, Ashok. Coming up next is Bunti. So the exclusive membership card that acquires 3 times more customers for brands. We all want to hear about that. Over to you, Eric.
Thank you, Anne. Hey, everybody. I'm Eric. I'm the co-founder and CEO of Bounty. And the problem we're solving is that most loyalty programs don't work. And they don't work because very few people use them. You can see from their engagement rates, they're very, very low. And right now, coming off iOS 14, loyalty is super important because companies can no longer acquire customers at the same rate. So they're really focused on retaining them. So we set out to build a more engaging loyalty experience and actually create a product that helps brands build communities. And when we started building this product, we took the best features from the best loyalty programs: Amazon Prime, Sephora Insider, Starbucks Rewards. And then we built dozens of new ways for brands and customers to engage. And then we seamlessly integrated it all into this card that lives in a customer's Apple and Google Wallet. So we've actually made engaging with brands fun and meaningful, and earning rewards a lot easier. And right now, we're seeing higher user engagement than Twitter in a SaaS product. That's something we're pretty proud of. So here's how the card works. First of all, each member gets a custom card with the personalized benefits that are configured in our brand portal by the brand. The benefits and the rewards are modified in real time, either manually by the brand or using machine learning. And then on the back of the card, we just offer a lot more ways for customers to engage with brands. Token gated experiences, Easter eggs, surveys, events, QR codes, referral links, all accessible right there on the back of the card. Think of it like a link tree for brands. We also offer multiple rewards currencies, including cash, tokens, gift card, points, etc. And then best of all, we can actually leverage push notifications without requiring users to download an app. We do that all right through the Apple Wallet, so that's super powerful. We're still in private beta, but we're seeing a lot of demand from brands specifically coming to us for one reason. They want to build communities. This is upmarket of their current loyalty software. So we did 175K ARR in October. We just signed another enterprise deal. We're on track to do 250K ARR in November. We plan to raise a $4 to $5 million seed round in January, and we're just closing out our pre-seed right now. We have 285K left on a $1 million raise.
Thanks for that. Could you just give us a bit more of a background on the team? Because it looks like you've got a very strong team.
Totally. Well, Jason, maybe you should introduce yourself. You're the ex-Googler.
Hello, everybody. Jason Sen. We had a product called Urchin, which became Google Enterprise or Google Analytics, which was used about 70% of the world's websites at one time. Spent 10 years at Google, worked on Google Enterprise as well, brought it to market across Asia and other markets globally. And then I've got an enterprise background from Ernst & Young and a few other companies that were acquired by the likes of SAP. I'm a builder, a founder, and a great leader.
Yeah, and on the product side, what we're doing is helping brands build communities. So we got our head of product from Fandom, which is the largest entertainment community in the world, right? They have 250 million uniques, very different communities, just like Zelda and Nintendo and Harry Potter, but ton of learnings coming from that. And then, Jason and I had a company before this called Store. And one of the reasons it failed was because we were relying on these antiquated customer incentive models like commission and, transaction-based loyalty points. And so what we realized is that it wasn't our technology that was broken, but actually the model.
Thank you.
As a consumer, right, is there a way for me to, are all these rewards aggregated across like a single platform or a single interface, or do I have separate cards for separate brands, and how does that work?
Yeah, great question. So one of the important learnings that we had, our last company was actually an aggregated marketplace, is that brands want to own their communities. Right. And they really think about this as like people that they're investing a lot of time and energy in. And so right now, every customer has a branded card per brand that they're a member of.
I see. And so I can't use the points or, rewards cross brand, right? It's just whatever I accumulate, it's for that one brand.
Right. Well, it depends. So we actually have, within a brand, like we have a couple brands that have 19 different cohorts within our platform. They have loyal customers, they have their employees, they have influencers, ambassadors, professional athletes, and they all have different cards with different benefits, right? And some of those cohorts are actually being rewarded in cash. So if that's the case, then yeah, you can use your cash wherever you want. But for a lot of the loyal customers and kind of ambassadors, the brands love to use closed loop gift cards, right? Because there's arbitrage baked into the gift card with the brand's gross margin. And of course, it can only be used to buy more product with the brand.
And Eric, one question from my end would be, if a brand already has their own loyalty program, for example, Sephora, they already have their own loyalty program, what would be the driving factor for them to switch over to you guys?
Yeah, really, really good question. So first of all, Sephora wouldn't be a target. Those are like Sephora, Amazon Prime, and Starbucks like pave the way, right? But what we try to do is take the best of that, package it in a SaaS product that people can get going in just a few minutes. So for us, when we're targeting these brands, we're looking for brands right now that are actively engaged in building community. right? They're not just looking for a points-based loyalty program, because the truth of the matter is anybody's going to accept free points. It's margin dilutive. It's not great for brands. So we're looking a little bit up market of that. And a lot of times we'll come into a brand and they'll have a loyalty line or Yotpo already. And they'll take their top loyalty tier and invite them to our platform, because there's so many ways, more ways that brands, that customers can engage and actually drive value to brands other than just the transactional points-based loyalty scheme that Yotpo and some of the incumbents offer.
Got it. Maybe a follow-up question to that would be, like, for example, Dior, Chanel, they would have their own loyalty programs. You have to fill up, your details when you make purchases with them. So the way I can think about it is basically you guys are the more exclusive. You guys are designed for the more exclusive customer base, where you get invited to exclusive previews and stuff. Would that be the correct understanding?
Yeah, I think that's a good way to look at it.
We have to make that answer short. Sorry, Eric, because we are
okay. Sorry, yeah, we are working with luxury brands and and promotional brands, and luxury brands don't want anything promotional. They want experiential based rewards, and that's why we work with Eventbrite, right? So they can actually create rewards, redeem the points for exclusive tickets to those events.
Got it. Thank you.
Thank you very much, Eric and Jason. All right. Our next and last startup to present is the startup WizKids, who is on a mission to change the way kids learn how to speak proper English. Welcome to Xoogler, Amit. Over to you.
Thank you so much. You guys definitely saved the best for the last amongst a great demo day. Thank you so much for that. Some of you will remember my background was that I used to help set up YouTube in India and parts of Southeast Asia. So yes, I grew that business from scratch to $100 million of annual revenue. But before that, my roots are in the villages of northern India, if you guys have traveled here. And where I come from, in the middle class and lower middle class, you don't see anything else but education for your children. So we realized that in skilling, the biggest problem is English skill. In India and in future and emerging markets. And we realized that if we could teach the English language confidence, fluency, etc. for children, they can go on and do something really meaningful with school, college, jobs, everything, right? There is a clear problem and a big gap, because in the offline system, only 5% children have good quality access, right? We realized there was a huge gap on great local content. We are very good at that. And we built a very powerful proprietary NLP to give children speech tech feedback. Currently, we're live in 9 major languages in India. This year is all about focusing on India. In future, we want to come to emerging markets like Middle East and Southeast Asia. Just looking at a core team, we do all our tech in-house, content curriculum in-house. We've been backed by some investors. Let's look at how things are panning out. So product-wise, there are 3 major things, right? So simplification of UI, great, amazing local content, and good NLP to give kids feedback. Marketing-wise, what's extremely important is to be frugal, and it's all about efficient funnels. So this is what we're doing. We had an amazing last quarter, grew to about 1 million MAU. We follow a freemium model. The revenue is validated at about 100K US annualized run rate. And over to you guys, because I'm sure you have a lot of questions, because you do want to help make this world better for children. So would love some questions, and any interest whatsoever, drop me an intro.
Hi, Amit. Thank you so much for your presentation. So I'm from Monks Hill, and we actually do have an investment in an English-speaking English pronunciation training app called Elsa, right? So quite familiar with the space. They target both adults and kids. Can you double-click into your go-to-market strategy and your business model? Like, are you, is this a B2C approach, B2B2C, targeting schools, parents?
Sure. I think where we are, we follow the freemium model. So at top of the funnel is this free community, which is now 1 million strong, like you just saw in the chats. Go-to-market wise, we are big believers in partnerships and being very good with digital marketing funnels. We are also very good at it. Part of that chart is also the fact that we acquire our users at a very, very frugal cost. less than 6 cents for a free user, less than $6 for a paid user, which is quite smashing given where the market today is at our current scale. Does that answer all layers of your question, or did I miss something?
No, that's clear. And I'm curious to hear more about your engagement and how you're measuring that, and sort of if you're able to share, what the engagement metrics like in sort of terms of DAU and how many minutes they spend on the app and things like that.
Sure. It's a very interactive tool. So which means kids, to learn each word how to pronounce, they have to answer there's a sequence of actions that happen. I can always take it offline, but we're doing more than 1 million words a day. And on a good day, maybe about 1.5 million a day. So that's broadly the engagement. Retention is super high. Our day 180 is now on a good day touching 15%. Day 180 retention. Yeah.
How many what percentage are actually going to the premium side? So you say you've got 1 million like free users. So how many are actually converting into the premium, and how much are they paying, and how long are they staying as paid users?
Sure. Very good question. So I think retention wise, we are fantabulous because nobody joins before completing their course. So we've got almost 97% retention and renewal. That's easy one to throw out there because it's so extreme a number, 97%, right? Now, we are not focusing on monetization right now. So where we are is we are exploring the top of the funnel right now and building the community and retention curves, building data sets for our speech tech and NLP. Whatever monetization we did was to prove 100 KRR to ourselves that, hey, at the end of the day, we're going to make a lot of money and this is going to be a sustainable business. So we only put in like a couple of 100 people through the paid funnel. To be very candid, we've got like 1 sales intern and 1 telemarketer. That's it. So with that, because we're so frugal and automated, we're able to do 100 KRR, yes. But we also know with all the ratios that we learned that this is a sustainable business. But over next 1 year, this is going to change. So we started launching multilingual support last quarter. We've gone from 3 languages to 9 now. We'll be about 12 to 13 languages by end of this quarter, which is less than 60 days from now. And post that, we'll start relooking at this funnel. This round is supposed to fuel up the sales and marketing team growth as well. So we hope to close next calendar year at about a 1 million ARR. So I hope that connects where we are and where we're going in the next 12 months.
And would love to find out, you mentioned your retention rate is at 97%, which is obviously a fantastic number. Would love to find out how you will be able to sustain that when you obviously scale to a bigger scale, for example. Would love to understand the strategy behind, especially and when you start monetizing too.
Sure. Fantastic. So one is we've been able to identify like very frugal approaches to building and sustaining this community. We are very obsessed about providing value to the children. This is like K5 age group. None of you asked the age groups. I'm just throwing it in now for the recording. So for early age, it's very important we take parents along. So there's a whole strategy around our paid users. Now, at scale, numbers do change. You know that, and I know that, having seen other businesses before. But what we're confident about is if you provide an amazing experience, that's when the magic really happens. Because if kids don't stay, they don't learn. If they don't learn, why are we doing this, right? Does that make sense, Karissa? Yeah.
Very much so. Thank you.
All right. So that will be it. Thank you very much, Amit. So this is a wrap. Thank you. So let me, thank you very much to all the startups who presented. Great pitch. That was great. Thank you very much to our panelists as well for your insightful questions. A big thank you, of course, to our volunteers. FYI, so this is the end of the presentation, but you can still access the platform as and when you want for the next 7 days to find information about the startups who presented and to take action. Thank you also to our partners, Stonks, and thank you for being here, and see you at the next one. Bye, everyone.